G'day there everybody right around the world. Thanks a lot for joining me on this Wednesday afternoon market recap. What we have essentially begun today is that of the closing of the open window, which originated between that of Monday and Tuesday. As you can see, just to very quickly recap what has happened over the first 3 days of trading this week is that we saw the tweezer top establish itself on the Dow Jones Industrial Average on Monday. Then again, we got the very quick and sudden gap to the downside on Tuesday. This is what has created the open window. Now, when we see these open windows in markets, in the actual indices or individual stocks, generally, but not always the case, we will see price action close the window before either continuing in the gap direction, which of course is at this particular moment to the downside, and it still stands, or essentially what will otherwise will happen is that we'll simply get stuck in a small consolidation, which will generally allow the exponential moving averages, the 10, the 20, or the 50, once again to come back up and trampoline price action in the direction of the prevailing trend. Now, at this particular moment in time, as at the close on Wednesday, it is too soon to actually call this. What we can see, though, however, if we start breaking down the sentiment, is that although we did see a pop to begin that of Wednesday's session, the candlestick itself, or the color, is that of a dark candlestick. So again, sellers are still holding the open window. I'm assuming that the bulls will move the Dow Jones Industrial Average and of course the S&P 500 a little bit higher up to definitively close the gap. This figure, by the way, if I hover my mouse over Monday's session worth of trade, is coming in at 26,435. And essentially when we get here, this is when we'll be able to bidirectionally set up the trade moving forward, if you want to, of course, take some positions in the diamonds moving forward. At this particular moment, though, and as at the close on Wednesday, it is a little too premature if you operate in the world of swing trading to actually be setting up some market orders to try and actually take advantage of the gap close. The risk and reward ratio at this particular time is disproportionate. It's not really worth your time. In fact, it's coinciding very nicely with our top 12 individual trade list, that of course being the analysis that we go through each and every week. So at this particular moment, you have a little bit of a grace period until we once again definitively close this open window on the industrial average. And then of course, we will allow the market participants, the active market participants, to either drive us down below the lows of Tuesday or to break out, of course, to new all-time highs, which is going to be the continuation of this larger bullish trend. It's anyone's guess at this particular moment. I don't really have all that much skin, if any, in the game, so to speak, at this particular moment. And I know a lot of people who follow me in pro are under, or at least in the same boat, so to speak. Really, at this particular juncture, we're really picking our moment to actually re-enter the markets. This is going to take a little bit of time, at least to reset in terms of these oscillators. You can see on my screen the Dow Jones Industrial Average is still extremely overbought. These oscillators, if you pay attention to this, the Stokes is still registering above the overbought line. The RSI, although it has adjusted very quickly, which is what it does, it is still very close to being overbought, and that of the MACD has only just crossed bearish. So only really triggering some of these sell signals, or at least warning us that we may be at best moving into that of a short-term sort of sideways consolidation. So pay attention to that. Now, again, if I continue the discussion into the S&P 500, we still have that very pronounced open window. Again, we still need time to fill it. We didn't get as much of a positive boost to begin Wednesday's session. We pretty much opened where we did on Tuesday, but you can see again the candlestick color is dark. We have somewhat of a false breakdown. You can see that we broke below the low of Tuesday, and then we essentially finished today's session with a lower wick. So again, this is indicating a little bit of buying pressure, but at the same time, we haven't really seen any follow through to definitively close the gap at this particular moment. I'll give you the figure also on the S&P 500. Please write this down. It's 2,851. I'm assuming that when we tag this number, maybe even potentially on Thursday, we should see a little bit of resistance. It might even coincide with that of an upper wick. But once that gap is filled, that is going to give you, of course, the opportunity to set up some pretty decent bidirectional trade setups, not only, of course, to the S&P 500, but also to the Dow Jones Industrial Average and that of the NASDAQ. Now, what makes this interesting is that as I say this, the NASDAQ has more or less closed the gap. If you pay attention to, of course, the high of today's session, it's coming in at 7,454. The low of this candlestick just here is 7,455. So we have, for all argument's sake, more or less closed this gap. So what I've been speaking about and referencing to that of the industrial average in the S&P 500 has happened, or more or less happened, on the NASDAQ. So this is essentially setting the foundations for what we want to see moving forward. So what I can now do is essentially bring in a little trigger here on the NASDAQ to say, look, if the NASDAQ moves above 7,548, I feel comfortable, of course, jumping into some Q positions for the continuation of this larger trend to the upside. Now, just because I put this trigger on my screen, it doesn't mean that it has to happen. I want you to understand this. This is just an insurance policy, so to speak, to allow us to capitalize on the possibility of the market breaking out and continuing its relatively fast pace sort of start to 2018. Generally, what happens is when you collectively see the oscillators as overbought as what they are currently signaling, although we have seen a very quick sell-off take place between Monday and Tuesday, it doesn't seem adequate enough to really allow these oscillators any real true breathing sort of space, so to speak. What we should see, of course, is in conjunction with those oscillators resetting, price action coming back down into a lower rising exponential moving average. It's anyone's guess whether it's going to be the 20 or the 50, but generally over time and generally over a number of weeks, we will see, of course, initially that next higher low setup that will sometimes usher in some form of either a sideways channel, which is otherwise known as a consolidation, or it may lead to some form of a longer sort of symmetrical triangle. It may even set up in some form of a stair step if we don't see a sort of deeper retracement from this current level at 7,411. So that's something to think about moving forward at this particular moment, though. The only market which I feel comfortable, so to speak, in terms of even a bullish or bearish trade is that of the NASDAQ, and that is above 7,548. I will be surprised if we actually see price action break above this for the remaining 2 sessions of this week. Now, as I say this today, Boeing Airlines had a gap to the upside. This is after the earnings announcement. So let me just take off this vertical line on my screen. You can see again, even though we got the positive reaction or initial reaction, we have that of a dark candlestick. We closed up $16.76. That's all well and good. I am prepared to actually go long on this individual trade. So I'm going to place the trigger. I am, first of all, going to allow a little bit of wiggle room. And I'm going to move it up to about 365.39 on my screen. I can remove this because this trade in the past has run its course. It was a breakout trigger above 301.66. And you can see we're stopped out at 335.80. So a pretty decent profit there moving into earnings. It was a countdown, so to speak, until you were actually forced to liquidate the trade. But now that we have rotated through earnings, it looks as though once again we have another continuation gap. The continuation gap, or the measuring gap, is moving in the direction of the underlying trend. So for all argument's sake, it looks as though this trend is set to continue on Boeing Airlines. Just allow, of course, this gap to be filled moving forward. It doesn't have to be. Just like I've given you the conversation or the talk around that of the industrial, the S&P and the NASDAQ, the same is true for the Boeing Airlines before, of course, it moves in the bullish direction. So generally, price action will close the open window. I like the actual candlestick color here. Generally, when you see a candlestick that's just white after an earnings candle and a gap to the upside, it doesn't really allow you really any resistance to overcome prior to, obviously, price action breaking out and continuing. Now that we've seen the initial sort of sell-off in the actual intraday activity, once, of course, we opened at more or less its new all-time high and we actually closed down a couple of bucks, it's actually produced that of an intra-high actual resistance area that once that level breaks, it adds, of course, to the possibility of the trend actually continuing. So Boeing Airlines is something that I wanted to reference in this particular video. Outside of that, the US dollar is quite weak, and that also leads us into both gold and silver. At this particular time, it looks as though they are moving into short-term resting patterns. It looks as though they are setting up bull flags, which are going to continue to break to the upward direction. I spoke about this in Pro last week. I'm not actually going to run through the trade setup, but there are some really fantastic profits for both GLD and also SLV moving forward. They have not triggered yet, or at least the major macro breakout hasn't triggered yet. But if and when that does, and I'm assuming that's going to be the case as long as the US dollar continues its continuation of, I guess, the bearish trend, which has been underway for the majority of 2017, or really the entirety of 2017. And it's really showing, of course, no major signals that it wants to actually stop this directional movement that it's been in. Well, that's obviously going to add to GLD and SLV moving higher in due course as well. So there is a lot of opportunity in there in gold and silver. Likewise in the US dollar, something that I'm not really prepared to short through UUV at this particular point. If we see a bounce to the upside indicated by this red rectangular box on my screen, there might be a pretty decent sort of continuation sort of trade for the US dollar moving forward. But again, gold and silver should be on your radars. Now, what is interesting, tomorrow is a relatively active day. We've got Apple reporting. We also have Amazon reporting. And I believe we have a couple of other companies. We definitely have COP, so that is the third stock. I believe CVX is on Friday, and that's it. Pardon me, Google is tomorrow as well. So as I just went through, we have those four companies and then CVX to finish the week off on Friday. So it's going to be a relatively interesting day session tomorrow. Expect a little bit of volatility in the NASDAQ if we start to see some major movements in any of those technology companies. It's most likely going to drive the NASDAQ. And again, you should be prepared for volatility. It's always nice when you don't have skin in the game during these periods. And again, it is a type of blessing anyway to have earnings overlapping as nicely as what it is in conjunction with the markets themselves being as overbought as what they currently are as well. So that's going to round us out for this Wednesday afternoon market recap. If you have any questions, please email me, success@pivotpoint-trading.com. I'll be back with you later in the week for another market update. I'll keep a very close eye on earnings tomorrow, and we might have some trade setups come Friday. If not, I will recap it in pro over the weekend. All the best, everyone. It's James signing off on behalf of Pivot Point Trading. Farewell.